Hi everyone, financial markets are on the move and we've another jam-packed week of economic events and earnings coming up. This week I'll discuss the 10% correction in the S&P 500 and a 5-week high in US dollar, as well as rate decisions from the Bank of England and ECB, and of course non-farm payrolls. So stay tuned. GKFX Prime presents the week ahead. Right, so euro dollar is back near its yearly lows around 1.12. Pound dollar is down 300 pips from its peak 2 weeks ago, and dollar yen and dollar CAD are both breaking higher. Clearly the reason is the Federal Reserve. Now let's just remind ourselves what the Fed said at its meeting last week. The important sentence was that with inflation well above 2% and a strong labour market, the committee expects it will soon be appropriate to raise the target range of the federal funds rate. Quantitative easing is set to end at the Fed's next meeting, so markets are taking the above statement to mean that rates lift off as soon as QE ends. Now that's all fine, but perhaps doesn't explain why the dollar gained even further on what was already expected. The explanation seems to be that markets are pricing in a possible future scenario and not what is known at the present. The markets expect a more aggressive Fed than the Fed itself is currently acknowledging. That expectation makes sense because of high inflation, but does leave room for the Fed to underdeliver. Why does this all matter? Well, I think to summarise, the dollar is trending higher because the Fed is now actively tightening policy. But if markets get a whiff that the Fed isn't as hawkish as expected, the dollar trend could turn downwards. Outside of Forex, the big trend that continues to dominate is the price of oil. Brent crude struck $90 per barrel for the first time in 7 years last week. Coming up this week, we have another OPEC Plus meeting. OPEC and its allied nations have committed to raising production, but did not meet their own quotas last month. And quotas themselves are probably too low given the high demand. If OPEC continues the status quo, that should underpin oil markets, but any agreement to rise output faster could put a crimp in oil's rise. Now, before I turn to the economic calendar, corporate earnings for the world's top companies are still rolling in thick and fast. Alphabet, the parent of Google, reports on Monday, January the 31st. Facebook and Alibaba report on Tuesday, February 1st, while Amazon reports on Wednesday the 2nd. Oh, and a kind reminder to please give this video a quick thumbs up for the YouTube algorithm. I'll wait just a moment so you can finish clicking or tapping. Okay, thanks very much. So now let's round things off with the economic calendar. The OPEC meeting I just discussed is on Wednesday. Before that, we have the Reserve Bank of Australia deciding interest rates on Tuesday, but consensus is that there is no change in policy this time around. The big one could be the Bank of England on Thursday, since another rate hike to 0.5% is expected. No change in rates or the guidance on rates is expected from the ECB, but we could hear a bit more about how quickly asset purchases will end after the PEEP program, which is the special program of bond buying created during the pandemic, which is scheduled to end in March. For the moment, Fed policy is diverging from Europe, so watch out for anything from the ECB that closes that gap, because that is what's needed to support the euro. Right, thanks everyone, good luck trading this week, and make sure to click on subscribe so you don't miss the next episode of The Week Ahead.